That's right. The GameStop earnings report was a flop, just like we expected. So this is Form 10-K filed with the SEC. It's sec.gov, Securities Exchange Commission. Now we'll go ahead and post this link down below in the comments so you can verify this for yourself. And it's a long article, but I just wanted to point out these paragraphs right here. So I'm going to go ahead and read these to you. So first of all, right in the report, it says a short squeeze due to a sudden increase in demand for shares of our common stock that largely exceeds supply has led to and may continue to lead to extreme price volatility in shares of our common stock. So they're defining a short squeeze right in their report, in their 10-K filing. And it goes on to say investors may purchase shares of our Class A common stock to hedge existing exposure or to speculate on the price of our Class A common stock. Speculation on the price of our stock may involve long and short exposures. To the extent aggregate short exposure exceeds the number of shares of our Class A common stock available for purchase on the open market, investors with short exposure may have to pay a premium to repurchase shares of our stock for delivery to lenders. So that's what the short squeeze is actually about. The hedge funds borrowed a lot of shares at a premium in order to short them. Shorting essentially means borrowing the shares and then paying it back at a lower price if the price does indeed go down. So they're kind of explaining the definition of shorting here and squeeze. It's interesting that they're going that far to write all about this, because GameStop is actually trying to defend themselves here, make them look like the innocent third party that they kind of are. It's not GameStop's fault that hedge funds shorted them. So this is the first real comment I've heard that company actually put out in regards to the short squeeze. So it continues, a large proportion of our common stock has been and may continue to be traded by short sellers, which may increase the likelihood that our common stock will be the target of a short squeeze. A short squeeze has led and could continue to lead to volatile price movements in shares that are unrelated or disproportionate to our operating performance or prospects. And once investors purchase the shares of our stock necessary to cover their short positions, the hedge funds, the price of our Class A common stock may rapidly decline. They're warning right here. The price of our Class A common stock may rapidly decline once investors purchase the shares necessary to cover their shorts. We've been seeing the shorts get covered. We've been speculating, I should say, that the shorts have been covering for a few weeks now leading up to this, and we are seeing the stock price decline rapidly right now, right after the earnings call. Stockholders that purchase shares during a short squeeze may lose a significant portion of their investment, and they're basically talking about people who bought in at $500 right here. Information, now take note of this. This isn't exclusive to GME. Information available in public media that is published by third parties, including blogs, articles, message boards, and social media, may include statements not attributable to the company and may not be reliable or accurate. This company is warning people right here that information about the short squeeze may not be accurate. And remember, they also say stockholders that purchase shares during a squeeze may lose a significant portion of their investment. That's what I've been trying to warn people about as well, who bought at the moon. So here's the Robinhood simplistic chart. The reason I'm pulling this up once more is because it's the after hours price. It dropped to $154, maybe even lower. However, on the year, guys, it's still up 3,799%. On the year, it's up $150. It was $4 1 year ago, down at this plateau, the very bottom, before the squeeze really happened, before all that started. So keep that in mind. Just because it dropped from 300 to 150 doesn't mean 150 is a great price for this asset right now. Yes, it's much lower than 300, it's much lower than 500. For people who are desperate to enter, it's not a bad entry, but it still is up 3,000 to 4,000% on the year. And generally speaking, I would never personally want to enter an asset that's risen that much that quickly. It's less than a year. It's been a couple of months since it's made that kind of gain. Alright, great. Now that that's all out of the way, let's jump into the AMC charts, followed by our GameStop chart in just a couple minutes here. Gonna keep things short and sweet today. You already know, if you've been watching our daily updates or our live streams, you already know what's going on here with both these assets, because they have continued to follow the trend that we've been discussing. The trend has been down. So here's our wedge on AMC. It's not up very much from the breakout here currently. Broke out here around $8. Now it's sitting around $10, just slightly higher than that breakout. And it absolutely could come lower than that still. It's not necessarily bottomed out yet. And there are multiple ways to draw the support line down below. So using the most conservative one, starting pre-breakout, and using these candles here, the lowest candles on the dip, well, the lowest I would expect it to go right now is about $9. Then it would be reaching this long-term support line, and I would expect it to find real support there and continue upwards after. It could bounce here. It's not for sure going down to $9. There are reasons it may bounce right about here. There are some short-term support levels in this box, like so. Some people are going to look at this as a buy box, and it'll be interesting to see how the price holds up in this area. Hopefully we see some consolidation soon, followed by continuation upwards from the mid to long term breakout of this gigantic magic triangle. That's where we're at in the phase right now. Remember, you can't make this into a new wedge. This isn't a valid pattern right here, because there's no price action up at the top of this wedge. So that's not valid. If anything, it would be more like this. So keeping that in mind, this will be the area to watch going forwards, right about $13. $13 is the immediate short-term resistance. And I'm waiting to see if the price indeed will break out of this upper resistance trend line over the next week or two. The end of this wedge is mid-April, so it could take a little time here. We're talking a matter of weeks now, not necessarily days. It could go on another run very quickly here if things turn around soon. Note this high area of confluence where this X occurs. You see an X right here, right on the resistance line. I wouldn't be surprised to see this shoot through this area of confluence, but time will tell. From the long-term perspective, it's about halfway. It's about halfway to the target. Right? From the short-term perspective, it's about halfway to the target, going the other direction. So it's at a very critical area still. And it has indeed extended below this other support, long-term support trend line. I was trying to state that this isn't a super accurate trend line. It's just showing a basic direction. And now that it's broken below that, I'm going to go ahead and readjust it to about there. Best case scenario, guys, we're going to see a bounce from this area. That's what I'm really hoping for on AMC for the bulls in the short term. It does have to clear this $13 resistance nonetheless before a real impulsive move can happen here. So that's something to keep a close eye on. I don't think it's going to come down too much lower from where it is currently. Now, I'll hop over to the day trading chart, but one last thing I wanted to say about that is the dollar index has actually been going up. The value of the US dollar has been increasing for months now, and it essentially has broken out of its pattern recently. And I do believe that's directly where all this selling pressure is coming from. This isn't unique to AMC. It's not going down because AMC is having problems with their company. It's going down because the dollar is going up. So when the dollar goes up, investors tend to exit their risky assets. It's called a risk-off period of investment, and we're starting to see that on the midterm here. Now that the election results are in as well, we have the administration change in the United States, and the dollar has been increasing ever since then. So if the dollar were to rapidly increase, unfortunately, some of these more risky assets are going to rapidly decrease. And that is what we're seeing right now. The question is, how low will it go? And funny enough, here's the mini wedge from the earnings call for AMC. And we have these support lines, the red and green, coming back from that area. Gosh, I'm really stumbling my words today. My apologies, y'all. Just bear with me here. So what's interesting about that is all I'm gonna have to call them resistance lines now. That's the issue, guys, because before they were support lines, now they are resistance that the price action has fallen below those lines. It's currently below there. The after hours is even slightly lower, about here. So similar to the long-term chart, until we see a push above this resistance, the trend is still down. AMC is the area to watch. $11. It'll be nice to see AMC closing candles above $11 once more. If it fails to do that, the real next area of support is all the way down at $9. Okay, Could drop another dollar or two. There's even more support lower at $8. I don't see it coming as low as $5 again. I'm pretty sure now that we've seen a large extension beyond the $5 buy box, it would be a stretch to expect it to come as low as $5 once more. But it is possible with the dollar index increasing. Okay, if the dollar keeps rapidly gaining value, these risky assets may keep dropping just as quick. Something to keep on the radar. I'm still bullish on AMC. All the fundamentals are there. The chart looks nice on the long term. We entered at a low price. I'm still bullish on AMC. This is a market-wide condition right now. That being said, here's GameStop. Now, well, yesterday was the earnings call, and from what I understand, it wasn't as good as people were hoping. And it appears that there's more bearish sentiment for GameStop nowadays than just a couple weeks ago before the earnings call. That's why I was putting out a lot of warning around here. That's why I exited GameStop around here. It got rejected off this gigantic wedge pattern. Once more, we've seen it down here as well. Now we see it right here. Bottom of this wedge is all the way down at about $60, okay? Now, similar to AMC, it may not go that low. I am hoping, and that's all that it is a hope. It's not what the charts are saying, but I am hoping that GameStop doesn't go quite that low, just because I know many people did enter at a high price right here, so that's a significant loss on those entries. An entry at $300 down to $60 is going to be an 80% drop. That's a massive decrease in a short period of time. The good news is for anyone waiting, who's been patiently waiting, I do mean patiently, we have a nice entry waiting down at the bottom of this wedge, bottom of this support. This is a long-term support line at $60 right now. Again, I don't expect it to go as low as the last low, which was $38. So it most likely will not see $38, but it could see $60, $70, even $50, guys. That's how ugly things could get on GameStop right here, right now. And it may be a quick move. It may be quicker, too quick to even make a trade based upon. If it just wicks down and wicks right back on up intraday potentially, or throughout only a couple of days, it can happen very fast, and it's gonna catch a lot of traders off guard. So I'm letting you know right here, right now, doesn't look done yet. I continue to stick to the bearish case here as long as we're below this long-term resistance from the gigantic wedge. So what GameStop needs to do here is start building some support along this $175 level, followed by a breakout of that wedge. However, during the after hours, it's about here now. This is where the price is sitting. Just above $150. Alright, so technically it is currently below to support line. So it's already failed to build support here unless we see some kind of extreme pump tomorrow, the next day, Friday. Okay, unless we see something, a nice green wick followed by a candle closing this week, it doesn't look good. And I'm going to continue to say that while it's underneath this wedge until it returns to a more attractive entry level. We're patiently waiting for an entry. That's what's going on the GameStop chart. Even if it does bounce here, it's not going to be any kind of confirmation until it breaks above this triangle. So that's what we're keeping a close eye on, and it is moving very quickly. So don't forget to hit that subscribe button for more AMC and GME technical analysis updates. Remember, stay calm, hold strong. Happy trading. Have a great day.